How's it going today, guys? So in this video we're going to be talking about the steps to actually investing in the stock market. Now if you watch some of my previous videos, some of this stuff may seem repetitive, but I kind of wanted to outline what I would see as the sequence of the steps you would go through from somebody who has no idea about how to even look into a stock or like anything about the stock market, all the way to trading your first stock. So this is like the steps that I would recommend taking. And these are like the steps I took myself when I first started trading in the stock market. So I got the 8 steps here outlined. And before I get into that, I just wanted to quickly mention, if you guys are interested at all, I do have an ebook that I've been working on for the past couple of months on the stock market. Finished it about 3 weeks ago, and I've already had a couple people look at it and read through it. I actually had one person, I don't want to show his email on here just for privacy reasons, but he read my ebook and he's already up and running. He's trading stocks and he was just thrilled because he sent me a snapshot of his trading account where he had already made some money trading stocks. And it's just really cool to me to know that I'm helping people make a source of income that they wouldn't have had without me, and it's kind of a cool feeling. So it's cool to be seeing that already. But that's the way the stock market can be. As long as you're educated and disciplined, you can make profits from it. Okay, so the first step in investing in the stock market, and this one is really frustrating for a lot of you guys, but this is a mistake I made myself, is the first thing you want to do is build up a 6-month cushion. This is a 6-month cushion that would say, like, let's say you work a job full-time. If you went to work tomorrow and they said you're fired and you had to span 6 months time, you need as much money as you would need to span those 6 months. Here's why. If you tie up money into an investment, and let's say the investment doesn't go the way you expect it, the stock goes down and you're stuck holding on to the stock, and then let's say all of a sudden you're getting behind on cash, you will be forced to liquidate and sell those stocks regardless of the market value. This happened to me when I was in that learning curve with the stock market. Had too much money invested into the stocks, and it wasn't a matter of the market being down. I got lucky because I wasn't in a down market, but I decided to buy a car, and I didn't really account for the fact that I would have to pay for like the DMV fees as well as taxes, and I just completely ran out of money. I had like $200 in my checking account, and I had to pay like $700 in taxes. So I was like, well, I guess I'm selling shares of my stock. And at the time I was investing in some company stock with the company I work for, and the stock wasn't down. I mean, it was fine because it was still up, but I was nervous because I was like, wow, if that stock was down, I would have like been forced to take a loss because I needed the money. And you don't ever want to be in a pinch like that. So I say 6-month minimum, and that's pretty much the rule of thumb everyone goes by. You want to allocate a percentage of your portfolio to individual stocks. You don't want to go all in with that. I mean, if you're young like me, you can do more than what some people recommend, simply because you're younger, you can take risks, and risks can pay off in some cases. But on the other side of things, you could lose money, but the school of thought with that is, you're so young at this point, you don't really have a ton to lose. So things that are a little higher risk may not be such a bad idea. And anything you're doing at this age that causes you to learn is you can't even put a price on that, honestly. The other thing that I want to point out here is you want to invest no less than $1,000. And I've explained that in some of my other videos, so I'm not going to go crazy into detail with that, other than to say that you pay commission when you trade a stock, and if you're trading less than $1,000, it's hard to offset that commission cost. Even with having a stock go up in value, you still have a lot you have to earn in order to offset that commission. Okay, so the second step after you have a 6-month cushion built up would be to decide on a trading platform or an account and then open one. Most of us beginning traders are going to go with what's called an online discount broker. Now, each of those has different perks as well as a different minimum deposit. So, for example, I have somebody who read through my book, and then he was asking me about trading and using Scottrade versus E-Trade. And obviously this information may change because they change their policies all the time. But I think E-Trade had a lower minimum deposit than Scottrade, but a slightly higher commission price. So just for example, that's one way how they differ. E-Trade, you have to have a little bit less money to open the account, but they are going to charge you slightly more in commission costs. So just something to consider. There's also a lot of legal documentation that goes along with opening an account. For me, I opened my account actually about 1.5 years ago, and when I did this, I didn't really have any proof of my identity because I'd never really taken out a loan or gotten anything but my secured credit card at my bank. So there wasn't a lot of information out there on me. So I had to send in copies of like my license, proof of mail, or proof of address, all kinds of stuff to prove who I was. So don't expect this step to take like an hour. I think I was like a month, pretty much 3 weeks to a month from the time I started opening my account to having everything accounted for, faxed in, having it processed, and then that's pretty much, it took about a month, 3 weeks to a month before I was able to fund my account. So once that's all done, you move on to step 3, which is where you're actually going to fund your account. Most of them offer all of these methods. You can do Western Union, direct deposit from your bank account, you can mail them a check, or a lot of them have branch locations. I know E-Trade has a lot of locations. You can go into a branch office for the most part and do a cash deposit. I've done both of these. I know for my mutual fund, I mailed a check in, and then for my individual stock trading account with Scottrade, I just did direct deposit in my bank account. So basically what I do is I initially funded the account, and then if I want to, if I make a good trade and then I actually have money saved up that I want to pull out, you can transfer it right back out. So you can go back and forth pretty easily with that. So then the fourth step here would be to learn about types of investments, because you can invest in something other than stocks. Personally, I trade individual stocks, but it's worth mentioning that you could trade stocks, bonds, ETF, mutual funds, and certificates of deposit. I mean, those are just a couple of examples of investment vehicles. So there's all kinds of stuff you can invest in. I know a lot of people who've had a lot of luck with ETFs. They're a little bit lower risk. So you want to do some research on what type of investment you want to make, because each and every one of these is different. And depending on your risk tolerance and how thick your skin is, there may be some that are better for you than others. I'll put it that way. So take some time and research what type of investment you want to make. So then we move on to the fifth step. Develop a trading strategy. This is just a few examples of trading strategies. Personally, what I do and what I educate people on mostly is technical stock analysis, where you're looking at mostly charts and numbers, you're looking for trends, and you're looking to play a trend in a stock for the most part. Another example would be a position trade. That's somebody who's buying this stock based on fundamental analysis, so company strength, profit loss summaries, how solid that company is. Are they making money? Are they losing money? Are they going to turn a profit this year? And that's somebody who's generally going to hold the stock for a duration of time. Whereas somebody who does technical stock analysis, for the most part, is doing a swing trade, a couple of days to a week, maybe more, where they're going to, take advantage of a quick uptrend to make a good amount of money just from that day, and then they're going to continue to do that over time and play those trends. So that's just two examples. But then you have people who buy dividend stocks. They strictly buy stocks that pay dividends either quarterly or yearly or whatever interval. All they're looking for is a consistent income from the stock market. They don't care about the stock price itself. They just want to get that dividend check whenever they do. Then there's people who buy penny stocks. I personally don't buy penny stocks. Some people have had luck with them. I don't get into it just because there's so much to know, even in technical stock analysis. There's no way I could possibly know about all this stuff here. So you kind of have to pick an area of study and educate yourself on that. Then, like I said, you got swing traders, day traders, position traders. And this is just a couple of examples of trading strategies. There's so many out there. So I really recommend taking the time to figure out what strategy makes the most sense to your brain, which one you're comfortable with, and then learning as much as you can about it. Okay, so the sixth step here is familiarize yourself with the trading platform. This is very important. You want to understand the order types as well as the interface of your stock market trading platform. One of the mistakes I made is when I initially bought one of my stocks, I was trying to do a protective stop on it, so if the stock price fell a certain amount within that day, it would automatically sell. I didn't realize how those worked, and now it sounds really simple. I don't remember exactly what the mistake was, but what it came down to is I sold without meaning to sell, and it was like a big mistake. And like within the next day, the stock went up, and I was like, I didn't mean to sell, man. I wanted to hold on to it. So understand what the order types mean before you try to do something like a trailing stop or a stop loss point. Educate yourself on the order types as well as the interface, because the worst thing is saying, okay, I have a profit here, I want to sell, and then you go, how do I sell? I don't even know. And I've heard horror stories of people who go to sell their position, and next thing you know, they doubled their position because they bought instead of sold. So like, that's not something you want to do. familiarize yourself beforehand so you're not stuck in that situation. Okay, after you've done this and everything else on here, then you're going to start a watch list based on your own individual trading strategy. So if you're planning on doing technical stock analysis, you're going to pick a couple of stocks to watch for a breakout, and you're going to monitor those stocks on a daily basis. Once you see a buy signal, you're going to trade the stock. So you're going to enter the position at that point. That is step number 8. So that's pretty much the whole process of going from a complete beginner to being a stock market trader. And this is like the exact steps that I went in and that I went through. And like timeline-wise, I was building up my savings for about a year. Like I said, deciding on the trading account and opening it did take me about a month, 3 weeks to a month. Funding the account didn't take long. I spent a number of months, and this was also happening while I was building up my cushion. I spent, a number of months educating myself about the stock market, on my own strategy, reading books, talking to people and learning as much as I could before I got into it, because I didn't want to end up losing all my money. I did lose a good amount of money at first just from the learning curve, but now I've been able to consistently turn a profit from the stock market. So it's good that I'm past that point and I was able to get through it. So that's pretty much all I got for this video. Like I said in the beginning, if you're interested at all, I do have an ebook on my individual or my personal stock market trading strategy. I will link that up in the description below, and there should be somewhere else on the screen that you can click, and that will teach you about, it's pretty much everything I've learned about the stock market blended into my own strategy and my favorite stock market indicators and the ones that I use to consistently take a profit from the stock market. And I've personally been able to make a couple $100s every single week with about 1 to 2 hours of time spent actually researching and trading the stock. So it's a nice little source of income for me, and it can be for a lot of people, especially young people, because you have the time to spend learning and studying the stocks. But that's all I got for this video. If you have any other questions about the stock market, please drop them in the comments below and I'll be sure to make a video on it. Other than that, thank you guys for watching.